Ja, liebe Kolleginnen und Kollegen.
Dear colleagues, a very warm welcome to the annual media conference of Volkswagen AG. Now, this video clip just gave you a bit of a glimpse of what the Volkswagen Group has to offer. It's a great pleasure to welcome our Chairman of the Board, Oliver Blume, and our Chief Financial Officer, Arno Andl. It's great to have you. Good morning. Good morning, everybody. And it's great to have you all here at Drive in Berlin, all those of you who are joining us globally through online platforms now. Oliver and Arno will give their presentations in just a moment. After that, we have a round of Q&A. For those of you who want to ask a question, just put your hands up and you'll be recognized. And those of you who are joining us on the webcast can also leave their questions on the chat box. Now, first question goes to you, Oliver. For many years, you've been working with the group, but you have been the CEO for about 6 months now. What's your preliminary conclusion? Well, for me, it has been a big honor and a great pleasure. I have been working for the Volkswagen Group for about 30 years, and it was a great pleasure really to see how much I was welcomed also by the entire team. There are some essential principles with which I manage this company, with a full focus on our brands, on our products. People for me are also very important, and entrepreneurial spirit is important, and of course sustainability is probably the single most important challenge of our generation. And we need to have clear, and have indeed set clear strategic guardrails for our group. So major challenges in the Volkswagen Group, but the good news is we have a great plan, a clear plan. Just in the past months, we have come up with quite a number of significant decisions, and I must say we've made faster progress than I had originally planned for. Many important decisions have been taken, something that you would normally do over several years. So we've managed to do that in a very compressed time frame. The right answers, we have set the course right, and I'm really looking forward to what's ahead of us. Making faster progress, setting the course right. I mean, this is something that a CFO always likes to hear. Arno, can you give us a brief summary of 2022? Well, in a difficult environment, we have achieved good and robust financial results, and at the same time, we have embarked on our transformation path towards e-mobility and digital. So I think we can be very happy with 2022, and I'll tell you more about that in a moment. Indeed, so we'll step aside for a moment, and the stage is yours, Oliver.
Once again, good morning, ladies and gentlemen. We're happy to have you here. When I became the CEO of the Volkswagen Group in September, I took stock and looked at the most important priorities. Compared to a house, the Volkswagen Group has a very solid foundation. In order to make it weatherproof and make it shine forth in new splendor, it is necessary to bring about refurbishments and restructuring measures. It is my personal ambition to manage the Volkswagen Group in a professional manner with a future-oriented strategy that can be implemented quite easily and with the right team spirit. The first months have shown that it has really paid off, that I'm wearing two hats at Porsche and within the group. We have defined the key tasks in the group based on the same principles in order to make our strategy implementable. Behind me, you see the newly created team, which is highly effective and efficient. Our colleagues in the team are responsible for production, procurement, sales, quality, development, design, and communication. And at the same time, they fulfill their tasks in the brands. That has worked out very well and has had a major impact. Within the team of all the brands, we can thus gain much more operating momentum. This leadership team is not only highly efficient, but it is also very, very effective. At the beginning in September, we defined 75 fields of action and combined them in a top 10 program for the Volkswagen Group. Everything was based on the principles: analyze, set priorities, take decisions, and implement, which is most effective and efficient. We've become a very strong and healthy group with solid financials. We are very well positioned globally. We are strong in Europe, strong in China, and we have a very ambitious growth plan for the United States of America. We gain more digital strength, especially with our new activities at CARIAD. Thus, we have become much more resilient by setting up new business fields such as the battery, and we continuously try to secure our supply chains. And we have become much more sustainable. Putting a focus on e-mobility and renewable sources of energy has helped us reduce our emissions significantly on a long-term basis. What impressed me most is the high level of motivation of our team of 660,000 people. They've developed a very strong team spirit, commitment, and circumspection. What makes me very proud is that our team has managed to bring about these restructuring measures successfully, although the war of aggression of Russia on Ukraine has aggravated the current crises even more. The geopolitical and economic order of our world is currently really seriously being put to the test. The high energy prices are detrimental on corporations, but also on citizens. Supply and bottlenecks have become nothing of the extraordinary, and nationalism and protectionism are on the rise. All these developments have a major impact on the automotive sector. Also, Volkswagen, with its brands in more than 150 markets the world over, is very much impacted by that. Our business success is based on free world trade, well-working supply chains, and affordable energy prices. Volkswagen is very well prepared for these changes and very strongly positioned. This can be seen in the balance sheet of last year. Therefore, it's all the more important that we continue to focus on the 10-point plan. These are the decisive topics that will be decisive for the future of Volkswagen. It's about the financial robustness of the group, and in particular, it's all about appealing product. We need to strengthen our position in growth regions of the world. First of all, China and the US. And we need to develop future-oriented software technology platforms, our own battery production, electric charging and energy, in order to extend autonomous driving and in order to bring about decarbonization and become more sustainable. We want to tap the entire potential of the Volkswagen Group in the capital market. The top 10 topics are systematically structured for the year 2023 for all the brands and the organizational entities of the Volkswagen Group, with a right methodology, with transparent and binding goals. This makes us be concentrated and gain more speed. And for our teams, it shows very clearly which path we have embarked upon. I will come to that in a minute, but now let's cast a glance on the past year. The Volkswagen Group in the year 2022 had a very good result and improved its profitability, despite a very challenging environment. The operating result before special items was improved by 2.5 billion to 22.5 billion euros. Sales revenues increased by 11.6% to 279.2 billion euros. The reasons for this are a much better product mix, the continued cost reduction measures that we've really intensively brought about, and price effects. The investment discipline, as well as the IPO of Porsche AG in September 2022, have really increased the net liquidity in the group automotive up until the end of 2022 to a total of 43 billion. We are now using this financial strength in order to invest into the future of the group. We are particularly delighted that our shareholders can participate in this success. The Board of Management and the Supervisory Board therefore suggest a dividend of €8.70 per ordinary share and €8.76 per preferred share to be carried out. This amounts to a total ratio of 29.4%, with an increase of 14% or €1.20 per ordinary and preferred share compared to the previous year. Arno Antlitz will provide you with the details of our annual balance sheet in a minute. Ladies and gentlemen, the success of the previous year was a major achievement of the entire team. Each of our brands have contributed to this success in all the 4 different brand groups. In the volume group with Skoda, we have presented our new brand. We have put a focus on the new design, a new logo, and a comprehensive update of the corporate identity. Furthermore, we accelerate and expand our e-offensive at Skoda e-campaign. Up until 2026, Skoda will present 3 new purely electric vehicles. Also with Skoda in India, we have had major progress. With more than 50,000 vehicles sold in 2022, India has become the 3rd largest market for Skoda the world over. At Cupra, up until today, we managed to deliver almost 200,000 vehicles. Cupra sales in 2022 compared to the previous year nearly doubled. Up until 2025, 3 new electrified models, the Cupra Terramar, the Cupra Tavascan, and the Cupra Urban Rebel, will help us to enter a completely new era. Up until 2025, we want to deliver 500,000 vehicles per year and thus drive our international expansion in new markets and new segments even further. With regards to our brand Volkswagen, I'm particularly proud of the ID. Buzz. I was even allowed to drive it myself. Its success shows that the combination of tradition and modern technology works out very well and is highly appealing to our customers. In the brand group Premium, we've been extremely successful with Ducati in the year 2022. Apart from the historic all-time high of the MotoGP in all classes, as you will remember, we had an all-time high of 62,000 delivered motorcycles altogether. With regards to the fully electrical vehicles, the sales curve at Audi is also going up. In 2022, Audi sold 44% more electric vehicles compared to the previous year. These strong figures for fully electric vehicles show us very clearly that putting a strong focus on e-mobility is the right way into the future. In 2022, also Bentley has been extremely successful. With more than 15,000 vehicles delivered in 1 year only, it delivered more vehicles than ever before. The record values are particularly impressive concerning the operating value with 708 million euros and the operating margin with 20.9 percentage points. Lamborghini was able to expand its impressive growth even further, and it delivered more than 9,000 vehicles in the course of last year. This is a plus of 10% compared to the all-time high record year 2021. Lamborghini, too, set new trends with an operating result of 640 million euros and an operating margin of 25.9%. On to sports and luxury. My personal highlight was the Porsche IPO. The IPO really marked a historic day. After the IPO, Porsche has become much more independent and agile, and this is why the company become even more dynamic. The IPO has shown us really clearly that we can be very successful in the capital market, despite a very difficult and challenging environment. We are going to use this experience in order to increase the value of the Volkswagen Group even further. In 2022, Traton reached the best possible values with regards to vehicle sales and sales revenues. Sales revenues increased by 1/3 to a total of 39.5 billion, and the number of vehicles sold exceeded the threshold of 300,000 units. Operating results up from 0.2 to 1.6 billion. The integration of Navistar and the high demand for new fleets on the part of our customers had a major positive influence on these developments. In 2022, Traton was able to sell already 1,740 purely battery electric vehicles. I myself drove them, and I'm really enthusiastic about them. And this also shows that we are on the right way into the future with Traton. On to the group division Financial Services. With a strong operating result of 5.7 billion euros, it significantly contributed to the strong financial result of the group. The results of the previous year show us very clearly the Volkswagen Group has very strong, attractive brands with very attractive products. And this makes us be very confident with a view to the future. Now I'd like to pass the floor to my colleague Arno Antlitz.
Thank you. Ladies and gentlemen, the Volkswagen Group has delivered solid financial results in what was a challenging environment. But also, we have made important progress in key areas of our strategy, and we have powerfully advanced our transformation. This speaks for the robustness of our business model and the willingness of our teams to change. So the Volkswagen Group is well positioned, and it operates from a strong financial position with a solid operating result last year. My thanks go out to all of our employees who have contributed to these convincing results, and also to the progress that we have made in implementing our strategy. And now I'd like to have a look at our financial figures in detail. Now, our sales revenues were at a low level, as in the previous year, because of a number of restrictions and disruptions in the supply chain and continued supply constraints of semiconductors. Sales revenues increased by 12% to 279 billion euros, and that trend towards higher quality and better equipped vehicles, therefore, was a guarantor for that, just as in the previous year. We were able also to increase our operating profit before special effects of 22.5 billion euros, and we have also shown a slight increase in the operating margin to 8.1%. This strong result was boosted by a non-cash valuation effect of our commodity hedges in the order of around 1.8 billion euros. But there were also, on the other hand, some negative effects that we had to absorb in connection with the closure of our business in Russia to the tune of around 2 billion euros. And the costs associated with the very successful IPO of Porsche AG amounted to around 0.6 billion euros. A result adjusted for these effects would actually even exceed the reported 22.5 billion euros. Now, we consider this is a solid result, given the global challenges of our industry, and also in view of the global supply disruptions and logistics disruptions that we see in our industry. Our profit after tax was 15.8 billion euros, and that's still 2.6% above the previous year. But we cannot really be satisfied with a net cash flow generated of around 5 billion euros. We have missed our self-imposed target of achieving a net cash flow in the order of the previous year, which was 8.6 billion euros. Now, this deviation is mainly due to the unstable supply situation throughout 2022 and also disruptions in the logistics chain, especially towards the end of last year. And the result of that was that our working capital, and especially inventories of finished goods and raw materials and supplies, were significantly higher than planned at the end of the year. The current plan for 2023 assumes that this increased capital commitment will be largely reversed throughout the year. The net liquidity of the automotive division at the end of the year shows a robust level of 43 billion euros, and this was driven, among other things, by the proceeds from the successful IPO of Porsche AG in September 2022, which in fact was one of the most successful IPOs ever conducted in Europe. The inflows amounted to 16.1 billion euros for the placement of 25% of the preferred shares on the Frankfurt Stock Exchange and the sale of a first tranche of 17.5% of the ordinary shares, plus one share to Porsche Automobile Holding Stuttgart. And even after the outflow of the special dividends of 6.5 billion euros net in January, a net liquidity of 36.5 billion euros remains. And it's precisely on this basis that we will continue to implement our strategy. Now, I'd like to talk about the operating results of our individual business units. In passenger cars, so the division that combines all of our passenger car brands, we have achieved an operating profit of 15 billion euros and an operating margin of 7.9%. In terms of heavy commercial vehicles, we were able to generate 1.6 billion euros. This is an operating margin of 4%, and financial services is a division that again contributed significantly to our good result with 5.7 billion. The reconciliation of the results to the previous year for the passenger cars division clearly shows that the main drivers here are an element of our strong operating performance. We're basing our work on a convincing product substance across all the different brands. We have improved our product mix and also the pricing, which have compensated for the negative effects of those slightly lower sales volumes. Our commodity costs for steel, aluminium, and battery raw materials have, however, increased considerably compared with 2021. So over the year as a whole, the increased product cost burdened the operating result by almost 8 billion euros. So despite our good work on bringing costs down, we could not quite or not completely avoid an increase in fixed costs due to the growth in turnover, of course, and the upfront expenditures for our new products. But still, our overhead cost program has significantly contributed to a good result and has consolidated our competitive position. Our target originally was to reduce group overheads by 4 billion euros, or 10% by 2023 compared to 2019. Now, we had already come close to achieving this in 2021. In 2022, then overheads again increased moderately compared to 2021 because of the development of our new business areas and also because of the acquisition of Navistar. But still, we're well below the reference year 2019, and our sales revenue also has increased disproportionately at the same time. This has contributed, of course, to a very robust position of our Volkswagen Group. Now, let us have a look at our individual groups, the individual groups of the Volkswagen Group. In the brand group of volume cars, or volume brands, the sales revenue and the operating profit and the return on sales increased in 2022. The operating margin of the volume group was at 3.6%. The increase in net cash flow of 1.1 billion euros also show a positive development that we obviously want to continue in the future. The brand group volume, i.e. Volkswagen, Skoda, Seat, Cupra, and commercial vehicles, have a great potential to contribute even more to the success of the entire group. There are currently programs that are under development to boost the volume group, and here we want to position the individual brands more distinctly for our customers, and at the same time also make better use of synergies in engineering, production, and after sales. The premium group was able to significantly increase its sales revenue and in particular also its operating profit. Audi delivers an operating margin of 12.3%, Bentley 20.9%, Lamborghini 25.9%. So the premium brands once again are impressively showing that they're extremely profitable and have a resilient business model. In terms of cash flow, there are also upfront expenditures related to the investment in new products and in the build-up and working capital, so those have, in a way, a counteracting effect. You were also able to follow the Porsche annual press conference yesterday. Now, Porsche was able to close the financial year extremely successfully, Oliver, and really, across all key figures, really was able to contribute to Volkswagen AG's overall result. The operating result was 6.4 billion euros. Operating margin was a strong 18.6%. And this development also is reflected in the very positive share price performance of Porsche AG since the IPO in 2022. TRATON has also already published its results on the 7th of March. The group's turnover was increased to 39.5 billion euros. Lower capacity utilization, higher product costs were then, however, compensated by better pricing and by a better product mix. On this basis, the operating margin of that brand or group of brands increased to 4% with an operating profit of 1.6 billion euros. The financial services division sales revenue amounted to 46.8 billion euros in the year under review. Operating profit continued continued to be very strong at 5.7 billion euros. There were positive effects from the continuously high demand for used cars and also lower risk costs. Ladies and gentlemen, let us now turn to the outlook. Very important economic indicators like growth prospects in regions or expected inflation rates clearly do remain challenging. But we also expect that the structural undersupply of semiconductors will improve in 2023, and also the supply of precursors of raw materials and logistics will gradually stabilize. We have a fascinating, outstanding brands with compelling product offerings in all major segments and an order book of around 1.8 million vehicles in Western Europe alone. So therefore, we do expect that deliveries to customers will come in at around 9.5 million vehicles in 2023. For 2023, we expect sales revenues to exceed the previous year by 10 to 15%. And the operating return on sales, we expect to remain between a rock-solid 7.5 and 8.5%. The Volkswagen Group expects a reported net cash flow in 2023 in the range of about 6 to 8 billion euros. The burdening effects from the commitment of funds we had at the end of 2022 is already taken into account. But also the guiding includes now a provision for additional spending to build up our battery business at PowerCo of around 5 billion euros, which comes on top of our current core business. And those investments, those upfront expenses in our battery activities are a very important prerequisite for the successful ramp-up of electric vehicle production. We believe this is an essential factor for success in the future. Our net liquidity is expected to be between 35 and 40 billion euros. It also includes cash inflows and outflows in connection with the payment of the net special dividend and also the regular dividend with a total of 11 billion euros, and both will be paid out in 2023. Ladies and gentlemen, the transformation of our company towards electric mobility and digitization requires focused financial governance. We need a courageous and wise allocation of resources to our future projects, but also we want to, and indeed will, keep our internal combustion engine vehicles competitive as long as they are on the market. The cash flows generated from these vehicles contribute significantly to build our future platforms. Volkswagen owns some of the most fascinating, strongest, and most valuable brands in our industry, and there's no doubt whatsoever that strong individual brands will remain a differentiator in the future. But we also must transform ourselves into a technology and mobility services group. We need to focus on our platforms, such as our BEV hardware, a unified software stack, batteries, mobility, autonomous driving. Our decision-making and our capital allocation will clearly be guided by this goal. Ladies and gentlemen, we do have a clear plan for the transformation of our company, and we will work to position our brands even better in the future, leverage synergies wherever that is possible, and work hard on costs and efficiency for the benefit of our customers and our stakeholders. We will scale our electric platforms. We will develop a relevant automotive software stack, and we will continue to invest in future-proof mobility services. All of that will happen based on our solid finances, based on our values. Thank you very much. And with that, it's back to Oliver.
Thanks very much, Arno, for this overview. Ladies and gentlemen, you have seen that we are very confident with a view to the future because we believe that the fiscal year 2023 will be very successful. In order to make this become a reality, we will continuously implement our 10-point plan successfully. I'll come to that in a minute in greater detail because I'd like to give you a more precise overview on how we want to accelerate the operating activities of our group and how we want to implement our strategy successfully. Let's start off by focusing on item number 1, the planning round. Volkswagen is consistently working on paving the way into the future. Our strategic investment plan up until 2027 shows this very clearly. More than two-thirds of the investments of a total amount of 180 billion euros will be invested into digitalization and electrification, which are the most important success factors for the future. The peak of the investments are going to be made in 2025. And after that, investments will continue to decline. With these investments, we intend to increase our competitiveness for the future. We strengthen our activities in the most attractive growth markets, and thus we strengthen our entire product portfolio. Our top priority continues to be our financial robustness in the Volkswagen Group. We're going to use our capital much more effectively and efficiently and concentrate more strongly on financial revenues and the net cash flow. In this context, we strengthen the strategic allocation of our capital based on a customer-specific product pool and growth regions the world over. We want to strengthen the resilience of the individual brands and reduce the break-even point even further. This is where revenues and expenditures are in line. And this makes us even more robust with our business model. At the same time, we have been more cautious with regards to CapEx, and we used the IPO of Porsche in September 2022 in order to reach a robust liquidity situation. These funds are now going to be used for investments into the future technologies of the group. These are our technological platforms, software, battery technology. It includes autonomous driving, and first and foremost, and this is our overarching goal, vehicles which make our customers enthusiastic. We want to increase the share of fully electric vehicles in our portfolio of approximately 10% in the course of this year. And by 2025, every vehicle sold in all parts of the world is supposed to be fully electric. On to the second item, our product portfolio. Our brands have a long tradition and are very appealing. Customers buy brands, and they're made up of icons. We concentrate in this context on the right product strategy, the design, the quality, and a future-oriented technological profile of our products, ranging all the way from small vehicles to heavy trucks. In this year, our customers can really look forward to many product highlights, such as the new ID.3, the ID.7, the ID. Buzz in the long wheelbase version, the Cupra Tavascan, the Audi Q8 e-tron, and the new Tiguan, as well as the new Passat. On to China. In China, we've become the #1 in the market. Our position is very strong. Immediately after the borders were opened up, I had the chance to visit China for 1 week. The Chinese market changes rapidly in the field of technology at tremendous speed, and it's really impressive to see what's happening in that market. And this is why the Volkswagen Group needs the right strategy and the right speed in order to secure its pole position. With regards to ICEs, we are very strong. With regards to electric vehicles, there's still room for improvement. This is why, under the leadership of my colleague Ralf Brandstätter, who moved from the board of management of the group and took on responsibility for China, we've established a Chinese board across all the different brands in order to take decisions more rapidly and accelerate developments and make use of new synergies. This is very much in line with our goal for China 2030. The most important pillars will be decided on the occasion of the Shanghai Motor Show, which will take place in April. Our approach is in China for China. In that context, in October, we have continuously extended our local partnerships. One very good example of that is Horizon Robotics, with which we developed driver assistance programs and highly automated driving systems in China. This is really important because the ecosystems in all parts of the world are very diverging, and we need local solutions for China. In order to accelerate R&D and develop a technological concept which is geared towards China, we will have to extend our local development capacities as quickly as we can. We also created Carrot China in order to develop tech solutions together with local players. All in all, this will most definitely exceed the expectations of our local customers in the Chinese market. What is more is that in the course of this year, we will start with the production of our new electric joint venture Volkswagen Anhui in Hefei. In the year 2022, the Volkswagen Group managed to deliver fully electric vehicles of the ID family in China and managed to double these figures. The BEV deliveries in China compared to the previous year increased by more than 68%. Now let me move on to North American markets. In North America, we are in the right place at the right time. In 2022, companies have announced e-vehicle projects exceeding a total value of 70 billion. This more than triples the previous record value in the previous year, 2021. We in the Volkswagen Group are playing an active role in this regard. Last year, in our plant in Chattanooga, we have started to operate a new electric assembly line, and we've also announced to implement the Boost plan of Electrify America. It is our intention to increase the current number of 3,500 rapid chargers, fast chargers, to a total of 8,000 by 2025. We want to extend our value chain in North America even further, and that is why we decided to build a battery factory in Canada a couple of days ago. Together with the Canadian Premier, Justin Trudeau, we managed to agree on a comprehensive investment to be made in Ontario. The good thing is that this intention was agreed upon by both parties because we want to establish a far-reaching partnership for raw materials, supply chains, and energy. In the course of the year, we announced the electrification of the U.S. brand Scout. Scout gives us the unique opportunity to enter the highly attractive pickup and truck SUV segment. This segment accounts for more than one-third of the U.S. American market, and this constitutes a major step forward for us in order to strengthen our presence and our profitability in North America. In this context, we announced 2 weeks ago that we're going to build our own electro factory in Scout in South Carolina. With this $2 billion investment, we'll be able to create more than 4,000 jobs. At full capacity utilization in this factory, more than 200,000 Scout vehicles can be produced every year. With all these particular measures, we strengthen the position of Volkswagen, of the Volkswagen Group, in the second largest automotive market in the world.
If America was going to take another shot, what would it look like? It would be a shot to contribute something enduring. It would no doubt take our 250 years of hands-on, hard-won experience and apply it fresh to something meaningful. Seems obvious that it would involve steel as well as the work of human hands. It's clear America's next shot would come from a factory. But this time, things would be different. The workers in that factory would have skin in the game, stakeholders. And the operation itself would respect both people and planet. This operation would produce something strong and smart, chock full of American ingenuity. But this shot would be a miss unless it resulted in something every single American could appreciate. And more than that, use. This something would be helpful. And it better damn well be fun. So it would be at home equally on a Tuesday morning or a Sunday afternoon. If America was going to take another shot, well, you know, it sure might look like a truck. One hell of a truck. one that is absolutely beloved but hasn't been around in 40 years. One from a brand that helped feed, build, and defend America. One that would excite our possibilities again. One that would make certain that the values of yesterday would lead the charge into tomorrow. Starting today, America is taking that shot with that truck. It's called the Scout. To right wrongs, to carry forward our past, invigorate communities, lead with respect, and help realize the promise of a nation. It is America's next shot, and we do not intend to miss.
Ja, lassen Sie mich jetzt noch ein paar
Right. Let me tell you a little bit more about the software, which will continue to assume ever greater significance in the future in order to make our products even more emotional. It was one of the most urgent measures to restructure our activities in connection with software. The media reported about this intensively. We are developing CARIAD further with future-oriented projects and with a revised realistic software roadmap. This is what we've successfully achieved in recent months. Thus, we build up our core competence in the field of software and enter into partnerships where good solutions have already been found in the market. This is how we managed to gain more speed and top up our quality. Bosch, Qualcomm, Horizon Robotics, or Harman Automotive are just to mention a few of our strong partners working with CARIAD. Furthermore, and this was also of the essence when we built up the company, we had to revise the interfaces to our brands, and currently we are optimizing processes, methodologies, and our tools that we are using at CARIAD. For our premium and luxury brands, in the course of this year, we will finalize a top-performance software, and it is very important to mention that it will include some of the components which will be included in a standardized software architecture of the group. This helps us use economies of scale, especially within our broad product portfolio within the group. And you know, what's so nice about the software is once you have developed it, it can be copied and transferred, and this is where we have unique opportunities within the group. CARIAD has called the year 2023 to be the year of delivery. A first important milestone is the new group-wide group application store, which was presented to the public at the Mobile World Congress in Barcelona. This gives our customers the possibility to use a digital experience in the car. Audi will be the first brand that is going to introduce the store from July 2023 onwards in selected vehicle models. Now onto the platforms and technology which serve as a foundation for our vehicles. When we talk about the Scalable Systems Platform, the so-called SSP, over the recent months, we have seen the lead development of Volkswagen, Audi, and Porsche. And thus we have developed our product strategy across all the different brands in the interest of our customers and in order to tap additional synergies. When we focus on platforms, we can tap additional potential because they can be used by different brands with the different technological components. This gives us a strong, scalable, modular system that we can roll out for all the brands before the end of the century. On the basis of this platform and based on our product-related decisions, we will decide which models will be built in which particular sites. Thus, we can tap additional synergies because we can use our platforms simultaneously for different brands. Now, currently, we have the platforms which are called MEB and PPE, for which technological updates have been developed. And we are going to intensify our cooperation with Ford when we build up the MEB. We're only at the beginning of our good cooperation project. So Ford will produce another E-model for Europe on the basis of the MEB platform. Thus, we double the MEB volume to a total of 1.2 million units over a total period of 6 years. And thus, we also use additional economies of scale. Also, the delivery agreement with Mahindra is about to be concluded. Already today, our MEB platform provides the technological basis for 10 e-models of 5 different brands, and with 500,000 producing units in the year 2022, it has already become the leading electromobility platform in the world. On to battery charging technology and energy. For the ramp-up of e-mobility, we need a stable supply of competitive battery cells, and that is the reason why, and that is what we're particularly proud of, we founded PowerCo in July. PowerCo is responsible for all the activities along the entire value chain of the battery. With that company, we can generate a total turnover of 20 billion euros, and we can create 20,000 jobs in Europe alone. What is more is that the Volkswagen Group has laid the first foundation for the first battery cell factory in Germany, in Salzgitter. And we have announced that we're going to build a second battery plant in Spain, in Valencia. From 2025 onwards, our Salzgitter factory is going to be in operation. This constitutes the blueprint for our global battery strategy. This is also attributable to the decision taken for Canada. The rapid establishment of the charging infrastructure continues to be a very important prerequisite for the ramp-up of e-mobility. Volkswagen is taking action the world over. Together with our partners up until 2025, we will have established 45,000 fast chargers in Europe, China, and the US. But this alone will not suffice. Fast chargers alone will not be efficient. We also need flexible and intelligent or smart grids. Then the electric car can be more than just a consumer, and it can contribute to the stability of the grids. It would also pay off for the customers because they could charge when power is available in abundance. This is what we've already seen in pilot projects with the energy supplier Midnetz. On to the next item, mobility solutions. We've just developed and prioritized our mobility map. We have abolished some of the activities, others are going to be pushed forward with a stronger focus. In July, we have concluded the Eurocar transaction, which will help us strengthen our mobility platform, and we will continue to extend our leading position with Eurocar Mobility Group in the field of sustainable mobility. The Eurocar Mobility Group covers a broad spectrum of mobility services of customers, from car sharing for a couple of minutes only, of a car rental for several days, or car subscriptions covering a period of several months. We have pooled all the services with the help of this financial service provider, and thus we can strengthen the refinancing strength of the Volkswagen Bank GmbH for the leasing business in Germany and Europe. The entire offer will be made available in a practical app across all the different brands of the group. Recently, we have started off with a pilot period of this mobility platform in Vienna, and new updates will be made available in the near future. On to sustainability, which is particularly near and dear to me, because we think that this is one of the major challenges for all of us, because we want to make the world worth living for future generations, and therefore we have to look at sustainability from a holistic approach, ecologically, socially, and economically. Today, we already see the effects of climate change. In the Volkswagen Group, we therefore focus on the entire supply chain, starting off with the development, focusing on our suppliers. We focus on our production sites, but also the ramp-up of our electric vehicles and the extension of renewable sources of energy, which is part and parcel of the whole package. And we take on responsibility for that ourselves, because e-mobility only makes sense if we can use renewables, and this is why we've got to increase our energy pool and contribute to that successfully. In the course of last year, we have introduced stricter CO2 targets, and these ambitious goals were confirmed by the renowned Science-Based Targets Initiative. We do not only want to reduce our emissions by 2030 by 30%, but we want to reduce our CO2 emissions in passenger cars and light commercial vehicles by 50%. Before the end of the year, our European production sites will be supplied with renewable sources of energy only and exclusively. In the course of this year, we will make a quantum leap forward towards sustainability because we break our ambitious ESG goals down to all the brands and the different business units with measurable standards and clearly structured measures to be introduced. On to the 10th bullet point of the 10-point program, and that's the capital market. We are convinced of the fact that we can increase the value of our company significantly. And there is a lot of potential that can be tapped in this context. What the IPO of Porsche has shown and what we've learned as a consequence of that is now going to be translated to Volkswagen. Our strategic investment plan up until 2027 shows very clearly that the Volkswagen Group is courageous and decisive with a view to the future. At the current moment in time, we are developing virtual equity stores for our brands and value drivers. And to me, it is particularly important that we use this tool in order to strengthen our individual entities and thus the value of the entire group. The results of these activities will be presented to you on a Capital Markets Day, which is scheduled for the 21st of June this year. And then we will give you an entire overview of the equity story that we have developed for the Volkswagen Group and how we're going to strengthen the value of the Volkswagen Group on a long-term basis. The most important value drivers are mostly significant to me that will be addressed significantly in the course of next year. This is why we've defined binding financial goals for all the brands, focusing on the return on sales and the net cash flow, the break-even, and fixed costs. We've also defined ambitious long-term goals for 2030 for the margins and with a view to the net cash flow. And we have defined very particular measures in order to be able to reach that goal. We try to tap synergies and economies of scale across all the different brands in order to strengthen our platforms, our software, and our products. Within the Volkswagen Group, we are in a unique situation because we can use these economies of scale. Ladies and gentlemen, you have seen that the Volkswagen Group is very strong. In recent months, we have managed to take very important decisions, and we have paved the way into a successful future. We can build up on a robust foundation. We accelerate the ramp-up of e-mobility. We bank on our own software platform, which needs to be revised, and we increase our battery competence. Ladies and gentlemen, in the recent months, we have done a lot of renovation, refurbishment, and restructuring. We think about the Volkswagen Group from the customer's perspective. We think about strong brands and products that make us all enthusiastic. We are going to invest 108 billion euros in the next 5 years, most of which will be invested into our future-related projects. Our platform and product strategy has been revised fundamentally, and will put a focus on design, technology profiles, quality, and economies of scale. Our regions, especially China and North America, were strengthened strategically with far-reaching decisions. We try to accelerate autonomous driving with our partners for the different, diverging worldwide ecosystems. Our mobility offers are geared towards the customer's needs, and with a future-oriented strategy, operating competence, and an ambitious profit and cash-oriented goal, we try to strengthen the capital value of the Volkswagen Group in a sustainable manner. The automotive sector is facing major challenges in all parts of the world. We think about using these opportunities with the right mindset, and what's most important is the right team spirit. With our robust structure and our new orientation that we have come up with in recent months, we can use our position, which is really strong, without losing sight of the different fields of action that I've just presented to you. This is how we want to continue to play a leading role in the electric and digital automotive world. Together with our team of board members in the group and our colleagues in the brand, We will continuously set the right priorities for this year and take the right strategic decisions for the successful future of the Volkswagen Group. Ladies and gentlemen, join us on this journey. Thank you.
Vielen Dank, Olli. Vielen Dank.
Thank you very much, Olli and Arno. Now, an invitation to get involved, well, is actually an invitation to ask questions here in the room. So raise your hands and then we'll see where we'll get you a microphone. And sorry for maybe not finding you directly there in the room and have to ask questions again. But we'll start with Jan Schwarz from Reuters first, and then we go from there. Thank you. In fact, I have several questions, if I may. You mentioned the virtual IPO, Mr. Blume, and also the date for the Capital Markets Day. But you've already done some work. Can you give us your feeling for which brand would be very much advanced, in the sense of who's ready, which brand is not quite so advanced, so that we can develop an understanding? And then also, you said before that your dual-hatted function of the VW Group and the Porsche brand has stood the test of time. Well, can you make that more tangible? Why is that beneficial, and how can you actually see that it does? Now, Mr. Antlitz, you've mentioned 15 billion euros to be invested in battery factories and commodity hedging. What factories are we talking about? Now, I could imagine Salzgitter in Valencia and another site, possibly in Eastern Europe. And, well, if so, how much of the overall capital goes to Canada, to the Canada plant? And then I think you also said that the Volume Group is currently developing a program to increase profitability. I mean, can you drill a little deeper and mention what it really refers to? What individual elements? Well, perhaps I'll get started with the first two questions. First one, the virtual equity story, just to tell you what the intention is here. I myself, in the last year, have learned an awful lot during the Porsche IPO, and we talked to many investors in that context. And I learned how you can make a company more efficient, get the priorities right. And I think that was also an approach to apply that to the Volkswagen Group and the individual brands and divisions, and to strengthen the entrepreneurial spirit. Because if you develop an equity story for a company, you're an entrepreneur yourself, aren't you? And you're trying to get your priorities right, to consolidate the future, or your future activities, to have also the financial backing for that. And this is what we're currently developing. In January, we've had a retreat meeting on identifying targets, and actually have agreed on brand targets. That was a first kickoff. Like a sales pitch, really, where all brands and units introduce themselves. And I'm not going to single out individual brands, and I should say that's premature. We'll do that when we meet again in June. But what we did see is that across all of our divisions, we have huge potential, for one thing, but also we have come to understand that there's need for action in some areas as well. Arno Antlitz and myself and the entire team of the Board of Management wants to make the Volkswagen Group a much more cash-oriented company, and there is need for action. Well, we've shown that, of course, but we know where we're headed and how we want to make that happen. At the end of the day, we want to bring the best of all the worlds, of all the brand groups together for the Volkswagen Group in order to boost the capital value of Volkswagen AG with a very clear strategy that is going to be sustainable, that has electrification ramp-up curve with the involvement of the regions and clear financial targets. Your second question refers to my dual functions. Now, first of all, it was a conscious decision to combine those two positions. That is organizationally, I should say, challenging. So that's a fact of life. But at the end of the day, it's always about setting the right priorities and doing things right. And I think over the past months, we've done that reasonably well. I mean, obviously, things need to fall into place first. But I'm very happy, and we made faster progress than I thought. Why does it make sense to wear two hats? if you're only managing the group, you're just a coordinator rather than a manager. But we need to have access to management structures in the individual brands. I'm always up to date in terms of what happens at Porsche. I'm closely related to people, to the processes and the management of a company. Because if you're managing an operating business, you can also then, on top of that, take the right strategic decisions on a group level. So this is also the methodology that we've applied now on a number of cross-functional divisions in the group. My colleagues who have a responsibility within an individual brand are much more powerful to apply those insights also on the group level. And that's true for engineering. My colleague Michael Steiner from Porsche is doing that. Then we have production, Christian Vollmer from Volkswagen, who's wearing that hat, or Hildegard Wortmann from Audi, who's doing sales, and Dirk Rose-Lohheide in procurement, just to give you a few names. And in fact, we see that right now, because it goes back to how we organize the 10-point action plan. There's high motivation in our teams. They're very specific in what they're doing, and this allows us to drive our business further. Well, maybe I take over here, Mr. Schwarz. You already answered the first question perfectly yourselves. So I should add, yes, it's exactly what you say. The first 3 factories that we've decided on, we communicated those 15 billion at Salzgitter, Valencia, and obviously now also Canada. There is a small planning contingency also for an extension of the factory network. And those funds are intended to hedge our commodity supplies. Obviously, we don't want to invest just in battery plants. We want to be active in the upstream of the battery supply chain. This is another important pillar of our battery strategy. And those remaining funds that are included in the 15 billion package are part exactly of those activities. Now, as far as the volume brand group is concerned, there are 2 approaches or 2 levers. One is we go brand by brand. Well, obviously, you can leverage potential there, and also in bringing fixed costs down because we want to grow. If we manage to keep our fixed costs stable, despite inflation, despite rising costs in the market on the supplier side, but we maintain our costs, but then if the volume group or the Volkswagen brand can grow on that basis, that already would give us a major scale effect. So that's one. Number 2 is productivity enhancements. In the past 2 or 3 years, we have seen major disruptions across that chain and also in our own factories because of the undersupply of semiconductors. Now we are getting it better. If we're getting a better supply situation with semiconductors, that will create positive effects in our factories and manufacturing cost, productivity enhancements, and obviously it's also about pricing discipline. But there's something else, and there's the volume group. Volkswagen, Seat, Skoda, and Cupra are going to show a much more distinct profile to their customers. But in the back office, production, logistics, and after sales, we will actually grow together, collaborate better, leverage synergies, and bring costs down. So I think this is the biggest approach that we're currently pursuing there for the individual brands in the volume group. Okay, next question goes to Stefan Menzel of Handelsblatt. He's here in the second row. Just put your hand up and you get your roving mic. Thank you very much. 2 platform-related questions for Mr. Blumer. What are the platforms that you're going to use for Scout vehicles? So what's the plan there? What vehicle platform to base the Scouts on? And then as you're rolling out the PPE, wouldn't it be possible for Porsche to produce outside of Europe? No, obviously, because you can use your Porsche vehicles to be built on an Audi platform. Well, let me start with the Scout question, the Scout platform. That's an entirely different vehicle segment. So this is where people use ladder frames as a chassis, and obviously we are going to use modules there as well, including battery modules. But other than that, it's not really an identical product. Also, the cell production will allow us to cater to those vehicles, but these are very specific, inimitable vehicle concepts that we're going to use there. Second question on the PPE. PPE is that collaboration of Audi and Porsche, where the Q6 and the Macan will be rolled out, which will be quite different from each other, albeit using the same modules, where it's not really that important to differentiate individual cars. In terms of Porsche, this is not a volume-driven company, so we have relatively small numbers, overall numbers, I should say. especially when you scale production numbers also globally. You would need a critical size, of course, in order to be economically efficient in producing those cars. Now, obviously, more than 300,000 vehicles last year in Porsche, that's true. But if you break that down to individual product lines, it's not really those significantly large volumes that would be attractive to site that production in other parts of the world. Now, what's important for Porsche? Designed and engineered in Germany, produced in Europe. So that's our tagline, if you will, and it's a really a quality seal, and they would like to keep that. But if some time in the future regulations are changing, that's crystal ball gazing. We don't know. Then obviously we will be able to respond, but that's not something we're talking about today. But in that case, the PPE would help you. Yeah, of course. Standardization will always help, and I mentioned that before. And that's what we're doing in our platform work. Zwickau is a good example of the MEB platform, where we have 3 different brands that are based on one platform, built in one factory. And then the SSP platforms will also allow us to scale that even further. And that's a huge opportunity that the Volkswagen brand has. Huge volumes, but pooling the platforms, creating cost benefits. Now, we'll continue on that same line. Christian Miskins from FAZ. Thank you very much. 2 questions. You mentioned significant investments now for the coming 5 years. Now, that sounds very abstract. You mentioned battery plants, but what's going to happen to your model range? Are you happy with your current plans for electric vehicles and the models you're planning to launch in the years to come? Or are you possibly thinking about coming out with entirely new models that you have not announced yet in order to be more powerful in the individual markets? And number 2, could you imagine to build another battery factory in Germany, or would you rule that out? Well, perhaps let me start here and say a word or 2 on model strategy. And obviously, I'm not going to give you the names of all individual modules. Maybe Mr. Andlitz will follow up. We're going to stagger our investments in the future. We have a stringent plan on capital allocation, and that's going to be really helpful. So perhaps Arno would like to say a word or 2 on that. But first off, it has been a major advantage of Volkswagen AG to have a great product portfolio and a brand heritage, which sets us apart from many of those new automotive brands that are joining that market as well. And it's my expectations that our icons, well, let's take the Golf, or the GTI brand, or the Tiguan, the Audi Quattro, the 911. Now, these are outstanding, iconic products, and they, I believe, can be transformed. For the 911, the example is that we're going to offer hybrid powertrains in order to move towards e-mobility. But if you take the Golf or the Tiguan, I see huge opportunities to turn that product into an electrical variant. Now, for Volkswagen, the IG generation has started very successfully. Now we're going to make some retouches there and have many good ideas for the future. With a platform strategy, Volkswagen is in the lead development for the SSP, for the A0 and A segment. Audi is in charge of the B and C segment, and Porsche for the D segment. And with that, we have a clear allocation of products, and please bear with me that I cannot give you the details at this point, because products will come as a surprise as we announce them. So let's work on them first, and then when the time is right, we will make an announcement. Because it's important for me also, when we talk about products, they should also be available in the short and medium term for our customers. Suffice it to say, we have many great ideas and many excellent things in our pipeline. I spend every week with our designers, and I'm really fascinated to see what we're preparing there for you. And maybe, Arno, would you care to say a word or 2 on our investment strategy? And then I'll come back to battery factories. Well, 180 billion is something that Oliver has announced. I mean, I'd like to shed some light on that. Our general objective is clear. We're a leader in our industry. We're going to invest in our future projects. We have solid financial foundation to base our work on. And that's a good opportunity also in difficult times to continue to invest. Now, if you look at those 180 billion euros in the last year, last planning round, it was 159. Now, what we added is battery investments in Scout. As I've seen, this has been a very motivating project. You've been able to see some of it. Now, if you drill a little deeper, you'll see that 1/3 will go into conventional technologies, ICE engines, but more than 2/3 will go into e-mobility and digital products. So that is quite ambitious. Now, by 2025, we expect a 20% share of e-mobility, and today already we're investing 2/3 in e-mobility. So a lot of upfront expenditure there for you. But at the same time, we also want to keep our internal combustion engines competitive. Also, EU7 is a new emissions regulation coming into effect. So it's really a dual burden that we're having. In the next 2 or 3 years, we have to invest a lot in electric vehicles, of course. And at the same time, we need to maintain the ICE vehicles competitive. We have a unique opportunity to grow sustainably and profitably in the electric market in the US. So the investment peak by 24-25, which includes those 180 billion, right, over 5 years, and that peak will then go down again after 2025. And I said before, post-2025, we can bring in the harvest. Now, Oliver also said that we have a very stringent and strict process on capital allocations, on brands, regions, products, etc. Benchmarks have been defined, investments as a percentage of sales revenue, and also a number of strategic guardrails, allowing us to understand where do we want to grow, what region, how much in the US, how much in India, for instance. And as part of the planning round process, the capital allocation will be very stringent in terms of its governance. And within those guardrails, the brands will also then implement their convincing and fascinating products, and factories will be transformed for e-mobility. So that was shedding some light on the 180 billion in the planning round.
Arno, thank you so much. Let me just tell you a little bit more about the battery cell factory. The one that we decided to build in Canada is not going to compete with those that we are building in Europe. When setting up battery factories, different factors have to be taken into account. Of course, logistically speaking, you have to have the battery cells in those regions where you manufacture your cars. You also need to take into account that you have to have the right share between your own production and cooperation with partners. Of course, here costs have to be taken into account because they play a major role in this regard. But you also have to take a look at the industrial framework conditions and energy prices. When you take a look at Europe at the current moment in time, according to our plans, we want to produce 240 gigawatt hours per year. And this total volume will be allocated to different battery stacks, 20 or 40 disk stacks. We decided to build a factory in Salzgitter. We also announced to build another factory in Valencia in Spain. And of course, this will depend very much on the industrial framework conditions and the energy prices in the different regions. And you know, you have to say this openly and candidly, with regard to energy prices in Europe, we are not competitive compared with other regions of the world. And we really have to make a major effort in order to become economical. We have made a clear commitment to continuously take action in Europe, but we have to wait and see when new factories can be built in the near future. Arno, there are 12 more questions on my list. I think I should close the list of speakers. Now, Henning Krug of Business Insider in the first row will be given the mic. The floor is yours. Thank you. Mr. Antlitz, in an internal interview with Porsche Consulting, you said that VW, the group in Europe, will not build any e-vehicle factories in Europe. I'm not talking about battery cell factories, but I'm talking about e-vehicle plants. What does this clear commitment mean for the project Warmenau? And over to you. China ranks in point number 3 in your 10-point program. Ahead of the US, it's the most important single market. The volume group is most definitely important for the well-being of the VW group. But Skoda, why does it have to leave the Empire of the Sun. China was the most important single market with 350,000 vehicles. Last year, not even 50,000. Why is Skoda leaving the country? Mr. Krug, let me take over. In the interview, the question was asked for the following region. How are we going to deal with capacities the world over, and what are we going to do in the future? So I said, we transform each plant one by one at the European level. We transform our ICE plants. We started off with Zwickau, and will follow. We have already started in Wolfsburg. But the main question was, will we have to build up additional capacities in Europe? No, that will not be the case. It was not a particular question to the question, answer to the question, what will happen with Wammenau. That is still not yet decided. But even if we go for Wammenau, no additional capacities will be rebuilt up, but we rather to restructure our factories towards e-mobility. And that will happen in the next couple of months to come. But it was not really a clear commitment or a decision with regards to Wammenau. It was rather a general statement that I made. Mr. Kruger, before I move on to China, let me tell you a little bit more about our top 10 program. It's not a ranking. It's not a Champions League table. Maybe we should have called it ABC, but I thought the 10 bullet points can be remembered quite well. This is why I developed this program. But each of the 10 items is of utmost significance without any competition between them. China is an outstandingly important market for the US Group with tremendous successes and partnerships that we've managed to build up over the last years. 4 weeks, I spent some time in China. And I was really impressed. I've always traveled to China for business reasons over the last 25 years, but what I've seen now is quite unique. Maybe attributable to the fact that we weren't able to travel for the last few years, but the technological progress made in that country is really outstanding and quite impressive. To us, in the Volkswagen brand, this constitutes a major challenge. Audi, Porsche, and all the others. But we've developed a very clear plan. In the field of ICEs, we are very strong, and we want to translate this into our e-mobility strategy. Growth in China is quite impressive with regards to electric vehicles. And the Chinese themselves did not anticipate such a rapid development, but they have done a lot in this regard. They have set up a lot of chargers. 25% of the new vehicles in China that were registered were electric. In 2025-26, we will probably reach the tipping point, and 50% of the newly registered cars will be electric vehicles. And you know, there is a really important race taking place in this country. The Volkswagen Group has very strong products with which we try to strengthen our position in the market. We will also take a look at smart car offerings, because this is where the Chinese customers have different expectations compared to us in Europe. That's something that we're not really aware of in Europe. You know, maybe they want to have a karaoke system in the vehicle or an avatar. These are factors that need to be taken into account. Now, we have to take decisions on what will be offered in the Chinese vehicles. We have to cooperate much more strongly with our local partners in order to listen to the customers in the Chinese region much more strongly. This will form part and parcel of a goal, a strategy that we will develop for 2030. And for Skoda, that's a different story. Arno Antler spoke about the allocation of capital. What are you going to concentrate on? We looked at the developments of Skoda in recent years in China. And Skoda has really developed in a very positive way in China by way of comparison. We all have to set our priorities. How can we boost the position of our companies? And how can you be flexible in the global market? That also fit in nicely to a question that we received from the Chinese market. The trend in the Chinese auto industry is that the trend of ICEs will decline and BEV will increase. And what is your plan to address the market? I think you answered that one. Let me just add to that, if I may. When you look at the product range, we will become much more specific. We will introduce the ID.7 in China. We have a lot of PPE models scheduled for China. Audi has entered into a joint venture especially for that purpose, and these are only examples that go to show that we have embarked on a forwarding strategy. Yesterday, we announced at Porsche that after Macan Electric, the 718 will also be offered in an electric version. Also, the Cayenne, we will have a much more luxurious SUV in the next coming years that will be launched in the market. And this is what the customers really expect from us, together with the right smart car offerings. So there is a lot that needs to be done. So now people are waiting for these vehicles in China. Over to Spain, Eduardo Magaron and La Vanguardia.
Thank you for all. My question is about SEAT, Mr. Blum. SEAT has no electric models at the moment, but Cupra does. That means that SEAT as a car brand will disappear when combustion cars disappear in Europe, or will SEAT disappear even before and only Cupra's brand will survive in the future? When will you take the decision? Thank you.
Well, first of all, we are quite happy about the developments that we have had with Cupra. 200,000 vehicles have already been sold. There is a very strong growth plan. The brand is very strongly positioned. You might have seen it yourselves. We had the readers' vote of Automotorsport with more than 1,000 participants, experts who casted their vote, and Cupra really got an excellent score. The readers were asked, well, which brands are the most appealing ones? Thanks very much to our colleagues at SEAT Cupra who have made this possible to position a new brand in this successful manner. It is very promising with a view to the future, especially for the Iberian Peninsula. Because with the new battery cell production site in Valencia and the small platforms that we are going to use in the Iberian Peninsula, we have a technological in-depth integration in Spain for the first time. All these are really good news. The model for Cupra and SEAT and how we're going to work in the future is something that we're currently working on. And I think just wait and see. Be patient. Please bear with us, because we still have to take decisions with regards to Cupra and SEAT. And of course, we'll do that together with our partners from the region. We've got the dealer network. In the course of such a transformation process, of course, a lot needs to be done. It will not take 5 years. It will happen much more quickly before a decision will be taken. But give us some more time, because we have to put all the different ends together, because I prefer to have a system that I've thought through from the very beginning till the end before I communicate it, because I don't want to have to correct myself later on.
Now let's take two questions. Christian Hetzner from Fortune and Frank Mahlmeister from Plateau Brief. Thank you. This is Christian Hetzner from Fortune. I have many questions, obviously, but I'll just ask one very relevant one. You've been in your job only recently, and when the Frankfurter Allgemeine tried to develop a brief or a description of who you are as a person, and the headline was the anti-visionary, and also someone was saying that Oliver Blume brings the group back to the hard facts. I mean, would you agree with those headlines as how you've been characterized in the press? Do you see yourselves in such a role? How would you characterize your role? How would you describe yourself as a public figure? And do you think it's necessary for you to set a very distinct or more distinct profile of yourselves for the benefit of the company, for the Volkswagen Group? Or do you rather see yourself as a team player who doesn't really want to be in the limelight at all times, as your predecessor was? Okay, I'm not going to make any comparisons here, but what is clear for me is that the group and the brands are what matter most. We people are just managing that. Everything that counts are our products and our happy, satisfied customers. And this is where I see myself. I'm a team player and, in fact, a service provider. An anti-visionary? Well, I'm a person who would not be in a position to say what the world's going to look like in 100 years from now. Because when you call people visionaries who are able to do that, then they often also have other qualities. In terms of my training and experience in those past 30 years, I have always been very close, down to earth, to the shop floor, to the operational business. I know how brand can be managed and can be managed successfully, and I'm clearly a strategist. So really the way of thinking for me is in shorter time spans. I could imagine what the world looks like in 10 years from now, and that is more tangible for me, something I understand. And this is how I organize my business. With all the experience I've had over the past years, I define a target for myself, and then going back from there, I'm looking at where we're currently at. It's like when you're hiking out there in nature, if you will. You put stuff in your backpack and said you're heading north, south, east, or west. So you have that strategy plan. And then I embark on that path with my team. And it will happen on the go that you'll have some detours here. If there's a fallen tree in front of you or a little stream that you cannot quite cross. But that doesn't really matter. You need to know where you're going, where you're headed, because that will then also determine what your team's going to do with you. So everything we do together with our team. So I would really see myself as an operational strategist and not a visionary. Mark Meister from Plateau Brief. Now, earlier today, you said the Porsche IPO has also, or will also, increase the market cap of Volkswagen. But if you look at the current share price, it didn't really work out, right? Because actually, it was shareholders selling VW shares to buy Porsche, and then the Porsche price went through the roof. So how can you be so sure that there'll be a ripple effect of Porsche on Volkswagen? How are you going to pull that off? And then secondly, with your virtual IPOs, are we going to get a second real IPO? Because there's speculations say about Lamborghini. And don't tell me I'll have to wait until the Capital Markets Day. Please, can you say today, will Lamborghini be a potential IPO candidate? Or are you saying no, it's not going to happen? Because the profitability sounds fine. I mean, almost like Ferrari, if you look at the numbers here. Well, first off, yes, we take great pride in the Porsche IPO, and it's worked really well. And especially if you look at the market environment at the time, many wouldn't think that was possible. But it actually shows you that when you have a well-thought-through business model, when it's robust, when it has a clear strategy, when the business model assumes responsibility for sustainable questions, then
decision-making processes that we are responsible for, because at the end of the day, the clients have to decide which data can be made available. Data protection, data privacy plays a very important role, and we can define how the systems have to be arranged and organized and which kind of data we need in order to keep the systems up and running. It is very important for us to say that there are major differences between the Western and the Eastern ecosystems. In China, for example, we want to develop tech solutions with our partners that the Chinese customers are waiting for. But we are very well underway, and in due course, when we're ready for it, we are going to make the respective announcements. But there are new agreements that we've entered into with Google or Apple. What we are currently working out different concepts for that particular purpose. Eduardo, please wait for the mic. Last question.
Brazil and other South American markets are included in the new investment plan?
Ja. Vielleicht.
Yes.
We have also plans for Brazilian market, both in terms of renewing the product. Oh, nee, German, Deutsch.
Du kannst Deutsch, Englisch, wie du möchtest.
Auch Pläne für.
Yes, we also have plans for South America. We want to increase our product portfolio. Also with regards to engines, a lot will happen due to the changed legislation. Of course, we will make the new engines available. And of course, we also look at the situation in the market for electric vehicles, which is not that large, to tell you the truth, in Brazil. But it provides us with ample opportunities for the future, and it cannot be excluded that we will also offer electric vehicles in the Brazilian market. So, thanks very much to all of you. Let me just add to that an extra couple of minutes. I see one of the questions here on my screen. There was one additional question concerning the ban of ICEs in the EU 2035. How does this have to be interpreted in connection with e-fuels and synthetic fuels? I'd like to answer that one because last night many of you asked me about this. First of all, this is a highly emotional debate. The ramp-up of e-mobility and e-fuels are not juxtaposed in any way. This is reflected in our figures. You can also see that when you look at the figures of Porsche, we have a clear commitment towards pushing e-mobility even further. It will be the mobility of the future. E-mobility in the near future will be superior to all the ICEs available in the market. So that's the end of that discussion. But if you look at climate protection as a whole, and this is not only a German matter for Germans or Europeans alone, but it's a worldwide affair, then you also have to think of what will happen with all the ICEs which are currently available in the market. There are more than 1.3 billion vehicles which are equipped with ICEs, and the number will continue to grow. They will still be driven around for decades in vessels, planes. We have not yet developed a solution. And here, synthetic and e-fuels offer a feasible alternative to reduce CO2 emissions rather quickly. The advantage is that they can be mixed with traditional fuels, and every single percentage point is of help in this context. This is why it's even more important to come up with clear electrification strategies and fulfill the necessary framework conditions. We need to launch appealing products in the market. That's our task. We have to set up the charging infrastructure, and we have to offer sustainable sources of energy in different regions of the world. In other words, also those regions of the world which are a bit slower need to be supported. South America is just one example. Africa, India. Here, everything will take much longer than it does in Europe. And that is why new solutions need to be found. But we have to do both simultaneously, but separate the two markets in the discussion because we're not competing with each other. You know, you can ramp up e-mobility in some regions and also take care of those regions that contribute to climate change. You know, some fuels are more inefficient than others. That's not a secret. But if you produce them in those regions of the world where sustainable energy is available without any limits, then this argument cannot be used any longer. Then you can produce these fuels, import them. In Europe, we will always have to import fuels, no matter what. But then we need to push it even further from both angles. And this was very important because I wanted to answer that one. I thought it was very important because I wanted to set the stage for you. Thanks very much, Olli. Thanks very much, Arnold. Thanks very much for your questions. It was a great Q&A session. And now enjoy and stay healthy. Thanks very much to all of you, and thanks very much for coming.